Next up, the citizen economists ask, what is a progressive income tax? Do progressive income taxes make sense?
Taxing your income is how the federal government funds the budget to provide for military protection, the EPA, Homeland Security, Medicaid, and a host of other services, including all those bank bailouts. But what is a progressive income tax? Well, progressive means the rate changes based on your income level. As you earn more, the government taxes you more. The progressive tax model also provides for a series of incentives, rebates, and tax credits for different kinds of behavior. Buying a house, investing in the stock market, having kids, and any number of other things, even putting good storm windows on your house. So where did the government come up with the idea for progressive taxes and for incentives? Well, in 1883, a British economist named John Maynard Keynes was born. He developed the ideas for progressive taxation, interventionist government policy, and models for government spending. He was hugely influential in the middle of the last century, and his ideas today are central to the Obama administration's economic policies. Keynes' ideas around tax levels deal primarily with his belief that the rich will save their money and not return it to the economy, but the poor will spend their money and they place it back into the economy, and that means that tax policy should favor the poor. Well, that sounds pretty good. The problem is that it makes no sense at all.
Keynes' central theme is that savings takes money out of the economy. Sure, that's true if you stuff your mattress with Benjamins, but savings is what allows for investment. Banks use your savings to fund my business ideas, and then use my savings to fund a new factory for your business, and so on. Investment is the fuel of the economy. Without it, you can't have growth. But the idea that the poor consume at a high level is very true. The 2008 credit crunch shows us that American consumers will spend in excess of their earnings, which is sort of a remarkable achievement. In this case, remarkable is not a good thing, but it does prove the point that Keynes has about how we spend. So, a tax rate skewed to favor the poor, or if the poor sounds mean to you, we'll just call them low earners, has the double whammy effect of stifling investment and creating an unsustainable spending pattern. Is that as bad as it gets? But wait, there's more! No. Tax credits are forms of interventionist government policy. By telling us what they'll give us a credit for, they're telling us how to spend our money. Remember the $3 billion Cash for Clunkers program? That little piece of interventionist government policy cost us $3 billion, and the net effect was it moved purchases of cars up by a month or two. Now, car dealers are gasping for breath again because no one's buying. They bought early to take advantage of the government bailout. Bailout is a funny way to put it. If you bail out the bottom of a boat, you throw water over the side, which helps the boat to stay afloat. A government bailout is like throwing the water up in the air. It looks great for a second, you look heroic, and it might help for a moment, but the result is the water splashes right back down into the boat, and you're all wet.
What other interventionist policies are there in the tax code? Well, there are thousands. From having kids to using energy-efficient windows, the government manages our behavior like an overprotective, slightly addled parent. It's like our parent is Rain Man, just, not good at math. But the result of those tax credits is that 47% of the population pays no income taxes, and that nearly 25% get money back that they never paid in. I don't know about you, but I call that welfare. Keynes calls it progressive taxation. So, 53% of the population pays for 100% of the budget, but another 20 or so percent of the population pay less than $1,000 each on their taxes, which is a very small percentage of their income. According to the Nonpartisan Tax Policy Center, nearly every household making up to $30,000 a year pays no income taxes, and nearly half the households from $30,000 to $40,000 pay no taxes. Almost 22% of those households making between $50,000 and $75,000 a year also pay no income taxes. The end result is that about 1/3 of the adult population pays for all of the federal budget. And President Obama wants to saddle that group with even more taxes for new health care, for more bailouts, and for a growing budget.
Do progressive taxes make sense? Well, they stifle investment, they encourage government policy that treats us like swaddled babies, and they encourage a government growth cycle which cannot help but collapse under its own weight. To me, worst of all, it nurtures a dependence on government which is wholly un-American. All thanks to an economist whose ideas were seen as failures a quarter century ago. Tell truth to power. Hear the real story. Think for yourself. Join the conversation at econmilitia.com. Take back your inalienable rights.